Hey traders, how you doing? Ready for something you're not going to see on any other channel? Okay, in this video we're going to be discussing optimizing your position sizing to achieve your financial goals in trading. I don't know why this isn't a topic that's more commonly discussed, but we're going to do it here. By the way, if you watch my YouTube, you'll probably notice that I took down most of my videos, and the reason I did this is because I don't really want to give away my particular systematic edge for free. It isn't really helpful. I'm trading in decent size. Next year I'll probably be trading huge size. If there's a dozen of us trading with huge size or it becomes viral and popular, and there's nine-figure positions, which isn't unreasonable, honestly, the way information spreads. I've been copied to death in Magic the Gathering, metagame to target against. I don't want to bring that here, but the stops become targeted. Since I use tight stops, it is not going to be that hard to, it would become a problem as market makers now target my stop. So I don't want people trading my system. It's unique and easy to copy. And I'm going instead, what I share is going to be on system development, risk reward, peak performance, macro, stuff like this. So what I'm doing on my Saturday night right now is, okay, I have all this trading data. Look, since I started trading live at November or just September 12th. And since September 12th, I'm up $54,000, but the more relevant is I'm up 30%. I'm up 30% on a 32% win rate with a true RR of 4.8. Okay, now if I take the wins and losses, and including the break-evens there's a couple ways to do this, but I'm excluding the break-evens and attributing all the break-even uh, wins and loss, positive, negative, two, win or loss, and including that in the math. So that's how I'm doing the math here. 15 plus 31, 46 trades over a year works out to what, 176 trades a year. If I have 1% risk, my risk reward per trade is about 0.89%. Now, if I take 176 trades with a 0.89% expectancy, my risk reward per year is 376%. In other words, if I keep my exact same trading execution, improve my edge not at all, and run it all for next year on 1% risk, I can expect a 376 portfolio growth for with which would be right around a 6-7 figure year for me, which is great. Now, you need to know your win percentage and your true risk reward. So you have to journal and you have to have this data to do this math and optimize for how much you should risk per trade. Now, the other thing that I'm looking at is odds of drawdown. So I have this risk of ruin calculator. I can put in which if you Google risk of ruin calculator, there's one of the top ones at Cashback Forex. So say my win rate is 32%. I have a 4.8 RR. I'm risking 1% per trade. I'm taking 180 trades a year, and I want to see my odds of drawing down 20%. My odds of drawing down 20% with these stats is only 2%. So what's interesting is I could make 7 figures this year without expecting to draw down more than 10%. I think that I can do better, and I'm willing to stomach a greater drawdown. I don't know about you, but I'm willing to draw down 20%. I may be even willing to draw down 30%. Why? I have, during the bull run, I went from 200,000 to 600,000, back to 300,000, back to 600,000. I've been through 50% drawdowns, back to all-time highs. I can stomach it. I've done it before. I'd prefer not to have a 50% drawdown. I might want to limit it at 30%, 20%, but it's something I could consider doing. So let's see, with a 3% risk, I would have 10,000% risk reward, which would be no, that would be, I think it would be an 8-figure year, right? it would be a 10x. Yeah, I'd make like $20 million. And I'd pay like $8 million in taxes, and I'd keep 12 million. So let's be real on that. Um, and by the way, with this size, like something I need to consider is that my reward will have to go down somewhat because of slippage. However, it might not be affected that much because I'm only trading Bitcoin and ETH, which trade tens of millions of dollars a day. And my strategy, I'm typically entering at the highest volume areas. I'm trading like market makers, part of their strategy. And so it should scale. It should scale. I'm not trading, oh, I'm only trading Bitcoin and ETH. So that is something to consider though, that slippage, it might go from 4.8 to 4. I don't know. I'll have to see when I have data and things grow. But with 3%, my odds of a 30% drawdown are 51%. There's even a 12% chance of a 40% drawdown. Personally, I don't really want that. 2% seems like a sweet spot for me where there's a coin flip if I draw down 20% next year, and I have a 30% chance of, sorry, about a 10% chance of 30% drawdown, so it's unlikely to happen, but could happen and something I could stomach and live through. So that is probably 2% makes sense. Now, also, if I consider my financial goals, if I make 376%, I would make about $1 million next year, and I'd pay about 300,000 in taxes. Altogether, I'd end the year with about $1 million, which is good. And it doesn't change my life though, because I already have everything I need financially. What would change my life is buying property out here would change my life somewhat, and all the property costs at least $1 million in my neighborhood. One, it's not super fancy, but low million, 1.5 million, 2 million for something really nice. I would prefer to make 5 or 10 million. It doesn't have to happen next year, but mentally preparing myself, I could make 20 million next year if I'm willing to live through a 30% drawdown. Well, this one I could make 5 million with not having to deal with it. There is the chance that during a drawdown like this, I will experience psychological issues and it will be hard to trade. So that's something to consider. But yeah, if I risk 3% per trade, it's still not unreasonable. Like the odds of a 50% drawdown are very unlikely. So it's something I could consider 2.5%. Now, let's go back and things become, I actually do want to look at 2.5%. We're going to look at that in a minute. But things are a little bit more interesting because I mentioned that I cannot trade alts with this size because you just can't. There's not enough volume and the strategy wouldn't work. So I can remove all the alt trades from my trading data, and I did trade alts. I can remove those from my trading data. Furthermore, there was a period of time where I was experimenting with a new system, and I could also remove those from my trading data. And I should remove those, especially the alt trades. That actually leaves me with a 57% win rate with a 5.2 true risk reward. However, my number of trades per year drops to about 70, which is quite a bit less. It's a little bit more than one a week. Now, if I take this data and I plug it back in, 57% with a 5.2 to 1, with a 1% risk, I would hit 622%, which is close to my financial goal, but not quite, of where I want to be eventually. It doesn't have to happen in a year, but why not have it happen in a year? Now if I look at 2%, again, 2% looks really good to me, where I have 4,000%, 5,000% growth. That would be just around 10 million, of course, which 4 million would go to taxes. High chance of not even that likely necessarily to have a 10% drawdown even. Like if this were my stats, like I could risk 3% and it would be no big deal. And I could get huge next year. So why not go for it? Now, the problem is I might have results like this, and then if I'm unlikely, I might have a 50, a 40% drawdown. It's something that could possibly happen. So that's something I need to consider, but I need to prepare myself for trading larger size, because if I look at the math here, there's not really a lot of reason for me to trade. There's not really a lot of reason for me to trade 1% risk. There's not really a lot of reason for it. I should do more, right? You need to have this kind of data. So let's look at 2.5% risk. So first, let's look at 2.5 with the worst data I have with the alt trades that I will not be taking. Okay, with 2.5% risk, my odds of a 10% drawdown are 100%. I will have a 10% drawdown next year. Will I have a 20% drawdown? Most likely, 88% chance of. Oops, where am I? 2.52. What happened here? This one, 2.5, 2.5%. Why is that rounding up? I don't like that. 100%. What was it? 88% chance. Now the risk of ruin stat here is there's a 6% chance I immediately draw down 20%. That's the first thing that happens. Okay, well, what about a 30% drawdown? There is a 26% chance of a 30% drawdown. Personally, I could live with that, most likely. And then a 1% chance I just immediately draw down 26% without hitting a new high. The odds of a 40% drawdown are 1 in 25. That is also something I could live with. 4% chance. Okay, now let's look at our improved statistics. Which would be right here, right? Which one? This looks not right. Seems like this should be 2%. This should be 2.5%. Okay, so our improved stats would be 57 times and 5.2, and oh, hang on. The stats I did were not quite right because I said 180 and it's 176. That's close enough. Okay, I don't need to worry about that. 79 and a 10% drawdown. Coin flip to even draw down 50%. That's not bad at all. 48.6%. Now, I'm gonna run one more set of numbers after this. And the problem is like most traders just trade. They don't do this kind of work. Like they don't sit down and do the deep work, which like this is super productive, right? This is deep work. I have a trade going. I don't care. I don't need to look at it. Gotten used to having trades open and sleeping in them and not checking. 0.013%. I like the sound of taking of risking 2.5%. So I want to take one more data set though. And what that data set is let us, I'm going to copy this. Let's remove all the alt trades, but let's keep all the losing Bitcoin and ETH trades. Okay, and run stats based on this, which is somewhere in between. It's a 39% with a 5.2 RR. So this could say, well, hey, we're going to make horrible trade. We're going to go on a bender where I make bad trades, right? But I'm not going to do, I'm not going to trade alts next year. So what was it? 39 and 5.2, which is improved. The number of trades per year. So here I have 31. I got to do 31 divided by 96 is the number of days in that sample times a year. To project, I would take 117 trades this year. 117 trades. Let's risk 2.5% and see what happens in terms of drawdown. That would be a 5,789. So just for a reference, 5,000%. 250,000 is my port size about, times 5,000% would be, my profit would be about 12 million in 1 year. I need to grasp my brain around large numbers to do that. Okay, let's calculate our drawdown. So this one's 39 and 5.2. 39%, 5.2, 117 trades a year. Risking 2.5%, 10% drawdown. It's going to happen. It's 99% likely. 20% drawdown might not even happen though. 99%. It might not even happen. %30 drawdown is very unlikely. So like everything is pointing towards risking 2.5% per trade. Number of trades, which is going to be something I need to sort of meditate on to prepare myself for huge drawdowns. Like I will have huge drawdowns along the way, but it could be crazy growth. So this would be the worst case scenario of risking 25% or 2.5% would be I will very likely it would be a 25% drawdown, which would be a from 250,000 would put me back to 200. I've been from fucking 600 to 200. Like I could do that. So now let's go back to my trading data and say, okay, I'm interested in what is 2.5% risk? Because this is maybe what I should be risking per trade. And the question is, can I handle it psychologically? This is what to achieve my financial goals and maintain within my drawdown parameters, I should be risking. This is what I should be risking. I should be risking. Oops. I should be risking. It's crazy because I also like this is counting that I'm risking $264. No, hang on. Yeah, my portfolio value is. Here we go. What's going on here? $258. Risking six. This is counting that I trade Bitcoin and ETH at the same time. So I would risk really 5% on a move because I'm risking Bitcoin and ETH at the same time. So when I say 10 straight losses that I've taken, it's really 5 straight pairs of losses. But that is baking this into the equation. So I would open a $6,000 risk Bitcoin trade and a $6,000 risk ETH trade simultaneously. I lose both. I lose 12,000. I lose both again. I lose 24,000. Is that something that I can sit through and stomach? It's something I need to meditate on. And I'll tell you what, I would prefer to have more than 3 months of data. I have the backtesting data, I have 3 months of data, and there's a couple ways to twist the data to make things look better, but it definitely makes sense to risk more than 1%. Like if I had risked more than 1%, I would be up by more than 30%. But yeah, this is now I have the data to tell me that I should probably do this. So, if you go to if you want a free copy of my trade journal, you go to my Twitter and my trading education mega thread. There's a tweet in there that has a free copy of my trade journal. By the way, like, I'm not giving away my systematic edge, but I don't see any drawback to me giving away risk management and position sizing stuff like this. Like, it doesn't hurt me at all if people are more reasonable in their risk. It's good. It doesn't negatively affect me in any way, and it's a way that I can help. So, yeah, you gotta know your win percentage, you gotta know your risk reward, you gotta know your trade frequency. Okay, much love and peace.